Welcome back, everyone. A few days ago, I decided it was probably about time for a uranium update. So I put this together, and then I realized there wasn't too much to talk about. So I figured I'd put it on hold. And then a few things happened. So on a very basic level, what we've seen so far this year is about 8 million pounds removed from someone's inventory somewhere. Now, about half of that is a bonus for uranium bulls in terms of Cigar Lake being down, which was not really anticipated. And we don't know when that's coming back. It is coming back, but we don't know when. And until then, it's a bit of a bonus for the bulls. Ranger, well, that was gone a few months ago. Cominac, gone at the end of this month. And those are both gone for good. And this has been known about for a long time. So most of what's going on is background, slow burn type of events. These are things that I mentioned above that have been happening or known about for a long time, but not necessarily expected to change anything immediately or tomorrow, just based on how the market kind of works in the background. But so far, less than 3 months in, and 8 million pounds gone for the year. And that's a lot of progress, even though nothing really showed up. Now, up until very recently, the spot market wasn't necessarily reflecting that. The volumes traded weren't as much as what was being removed, and when they were being traded, it was mostly incrementally. So the spot price was doing very little. It was maybe dragging in one direction or the other, but not much was happening. Then a few weeks ago, I guess, months, Yellowcake bought $100 million worth of uranium from KAZATOMPROM. Again, not really directly in the spot market there, although now it's looking like KAZATOMPROM may have to refill their inventories partially from the spot market. But that was their pre-agreed to option for 2021, and so that's on their part. They actually raised more. They raised 140 million, meaning they have more to presumably buy from the spot market. And then the other thing about the spot market, or thing to be, or thing that people might have been thinking about logically, would be Uranium Participation Corp trading above NAV, which sends a signal for them to raise some money and buy more uranium. And interestingly, Yellowcake, even after their raise, they're also trading at a premium to NAV, so they can buy more and it would make sense for them, assuming they could get the money and make the spread. Now, over the past few months, there has been a lot of discussion about spot, and again, recently, a lot of discussion about spot moving either one way or the other. And personally, what I was going to say before and what I will say now is that if we're talking about $1 or $2, $3 or $4 over the next few months, I don't care. I mean, it's irrelevant. The only company, or I mean, not the only, but the main one public company in production is KAZATOMPROM, and so the moving spot price in the very short term doesn't really affect most of the companies. And if we're talking about, okay, when the companies would be selling, well, A, it would need to move more than a few bucks, and B, it's not in the next 1 or 2 months. So for those reasons and a few more that I've outlined in the past, while it would be nice to see some progress of price moving higher and higher along with equities, it doesn't matter in the very short term. And so that's why one of the reasons why I don't really concern myself with day-to-day dollar moves. Now, one thing that I did want to mention as a personal standpoint of I think this should happen is I think Uranium Participation Corp and Yellowcake should really have an at-the-market offering running. For those of you who may not know what that is, An ATM allows companies to essentially enter the market selling shares to raise money directly. Now, why I think this is relevant for those two especially is because I'll get more to this in a second, but now we're in an environment where there's multiple bidders in the market, and so we don't know how deep the market is, meaning it would be nice if they were able to, let's say, raise a little bit of money, shoot a bid into the spot market, buy a little bit of pounds, see how it reacts, raise some more money, and so on and so forth, as opposed to just dropping $200 million worth of shares and then not being able to necessarily access that much uranium. So I think an at the market would really be helpful. And at this point, honestly, I don't understand why they don't have it. Then yesterday, what happened seemingly all of a sudden and seemingly out of nowhere is Denison, a junior, decided to buy 2.5 million pounds of uranium on the spot market with a fresh raise. Then the morning after, Uranium Energy Corp decided to buy that they're going to buy 400,000 pounds in the spot market. So that's about a month's worth of deficit that is going to actually hit the market, actually hit the spot market, kind of overnight. And that's probably a good part of why the spot price has moved. And this action, I mean, it's kind of random and odd and confusing on a whole number of levels and inspires some other questions, especially considering Uranium Participation Corp is trading at a price where it is basically asking or begging the market to have it raise money and buy uranium. Now, for context, the Denison plus UEC raises or announcements really would only amount to about 1.5% of annual consumption. But this maybe plus some other things too, but these announcements and a day later the price is up $2. So just wondering how much uranium is actually available or if this is just front running again as we saw with Cameco. And it kind of brings up the question that a number of people, myself included, have said or questioned and how much uranium is actually available if someone wanted to buy a meaningful amount. Now, the recent action by those two brings up an interesting point about reflexivity in this market. And I do think there are some companies out there who this type of action would make sense for, and there's others who it wouldn't. So I figured I would break that down a little bit. Now, the type of company that may want to consider doing something like what Denison and UEC have done is a company, maybe it has a lot of cash that they don't need yet, and so they're looking for something uranium related to invest the money in that will provide a return later when they do need the money. Or those who have access to cash at a price where buying physical now may offer better risk-adjusted returns than their equity. And this includes those who will need higher prices to restart, but could buy cheap physical now and earn a return between now and then. The theoretical example of at least the first type of company, one that has cash now that it doesn't need, is NextGen. So NextGen has 215, I believe, million dollars Canadian on their balance sheet. In theory, they could buy 5 million pounds. Forgive me, I don't know the conversion in my head, but about 5 million pounds, maybe more, of uranium. And in theory, if they were to sell it at a higher price, that could fund most of the development for the mine. And that's just basically of cash that they have now that they set aside for general and development purposes. So that's an idea. On the other hand, there's also those who might want to consider it in terms of some companies that think it might add value or add more story value to their equity than the value it reduces by issuing the equity for money, or who have price based on factors that are beyond the current uranium price. Because there are some companies out there that have more of a mixed investment, and it may make sense for, on their uranium side, to buy pounds here. Now that said, I think there are also many companies who shouldn't be considering buying physical uranium. And those companies are the ones whose equity provides lots of leverage to the price. Now, some people might assume that that's all equities, but realistically, there's large variances between the ones that provide a lot of leverage and the ones that provide very little leverage. And so the companies whose stock price is low enough that makes their access to cash more expensive than their peers, those are the type of companies that shouldn't. So for example, if there's a company that's cheaper pounds in the ground, but that gains a lot of value as price goes up, maybe that type of company shouldn't, especially if they're low on cash now. Now, in reaction particularly to UEC's raise, the market seemed to be sending a very clear up 20% signal that it liked what they were doing. And, if I were trying to read that, I would take it as a meaning of the market telling the company that maybe they should do more, which is odd because it was very different from the reaction to Denison. I mean, Denison did raise below the market, and they were up from the price that they raised that. But either way, the UEC action was very telling, if you will. And who knows, it may even suggest that peers like Energy Fuels, who also has a large at the market available to them, I think they filed a shelf not too long ago. But anyway, they may consider doing the same if they think that they might be rewarded like UEC was. Now at this point, I don't think it's particularly a problem, because if you look at what's going on in the market, price is supposed to send a signal to everyone, all the market participants, to do things. At this price, the signal is produce less, don't explore, don't do anything, because the price is too low. But only when the price moves, let's say $55, $60, signals, okay, restart existing production, maybe add lower cost production, but kind of hold steady. At the same time, explore some, don't be a massive rush for exploration, but explore, try and sustain the current level. Then you get to 70 and it's okay, add more capacity. The market's asking for capacity as the price goes up. And then if we were to get much higher prices, let's call it 100, 90, 100, whatever you want to say, the market is saying, sorry guys, we messed up and we need a lot more uranium and we need it as soon as possible. And at the same time, that type of price would be saying, sorry, Mr. Market, we're going to need you to explore for pounds in 2035 because we just realized, yeah, that's tomorrow and we need it now and they don't exist. Now, I'm not saying we get to all those prices, but I'm saying price is an important signal and it's broken. KAZATOMPROM also released their results recently. Now, there was no new production guidance. It does remain to be seen if they will hit their 2021 numbers. It looks like they may be able to, although CapEx was down last year, but is anticipated to be up this year over last year and the year before. So we'll see where that ends. That said, beyond that, they reiterated their flex down. They're sticking to their plan and they're not ramping up production, and looks like they're in no hurry to do so because, again, value over volume. They've said that many times, and it looks like, at least up until now and in the near future, they will be sticking to that. The other thing they said is that they may need to enter the spot market to fill some requirements, and that is probably also a bit of a positive news spot related. Now, there are a few other things going on, and while I wouldn't call them minor, they're not necessarily hitting the market today, so I wouldn't expect the market to necessarily react to them. As I've said many times in the past, this market needs to feel the demand, feel the buying in order to kind of move. But one of the big things is there's been a number of reactor extensions. The biggest one recently, and this might have been a month ago at this point, was France delayed the shutdown of a lot of reactors because they're safe, they're fine, and they could last 20 more years, but they extend them for 10 for now. But so this is a big positive. I think it's like 120 million pounds or something, which is substantial over 10 years, especially because it is starting in the mid-20s, and the mid-20s, when we're talking about mine finance, well, that's basically today. And so that is very relevant, although it's not something that would necessarily show up in the market now, even if it should, just based on how the market works. So there's that, and there's been a number of other little bonuses along the way, other reactor extensions, or, there's still the Ukraine mine from a while ago shut down, Cigar still down, a number of little positive developments. Now, another major piece of the puzzle is China, and in a recent 5-year plan, they recommitted to nuclear, as many were expecting. And they've made some pretty ambitious goals, and time will tell if they overshoot, undershoot, or meet it exactly. We'll see. And the commitment to nuclear, it's what many countries probably will arrive at if they look at the data and they look at what they would need to do to clean up the air, reduce pollution, and they'd have to implement a timeline, and that's what China is doing because that is their stated goal, and we'll see if other countries join them. Overall, though, the metal and the equity do seem to be moving at slightly different paces at this point, and I think what we're seeing in the market is the tension there of those two kind of butting heads. There's lots of progress that still needs to be made in the physical, and there's plenty of questions along the way of how will the equities act and react to different events. So still a long way and a lot of story yet to be told. Anyway, so that's the major recent updates and events in the uranium market. A number of things that I said here are just a personal opinion, especially with regards to what should be done and who should do what. But remember, this isn't investment advice, and it's just intended to try and be helpful. And beyond that, I wish everyone a great day, and until next time, enjoy.